I want to talk about today why we may see another market crash. I want to talk about four major economic indicators flashing red right now. But before we jump into the notes, I want to showcase what's happening right now on the QQQ charts. So if we look right now on Invesco QQQ Trust, we can see that yes, we had a red day on Friday, which was what, May 23rd? And that was because Donald Trump issued a 50% tariff on the EU. Okay, so we can see right now that not too long ago we hit lows of 402.39. And yes, we have rallied and recovered a great bit of that drop. We still aren't back to all time highs, and we are at a resistance zone, as you can see right here. Let's go ahead and look at this RSI, right? So the RSI on May 23rd is at 60.90. So it's getting close to that overbought level, and we had a sell-off. So yes, there is some potential here for it to flush back down to some oversold levels. We're trading above the middle Bollinger Band. Again, this is just technical analysis. What is really driving this? Because we know it's not lines on a chart. What's really driving this is what I have in my notes. Let's go take a look at my notes. Okay, four economic indicators flashing red. Prepare now. Okay, so number one, we have escalating trade tensions. President Trump announced a 50% tariff on all European Union goods effective June 1st. Trump also threatened a 25% tariff on smartphones not manufactured in the US, targeting companies like Apple and Samsung. Of course, we had some good news recently prior to this, which was temporary truce with China. A 90-day agreement reduced U.S. tariffs on Chinese goods from 145% to 30%, and China repaid the favor by lowering theirs from 125% to 10%. But remember, that is a 90-day pause, and every day we get closer to the end of that 90-day pause. Another indicator is the bond market signals. Rising yields. As of May 21st, 2025, the 10-year Treasury yield reached 4.6%, and the 20-year at 4.13%, and the 30-year at 5.1%, indicating a sell-off in government bonds. It's insane. It's absolutely insane. These numbers are at their all-time highs. I even have a chart I'll show you guys in just one moment. Another indicator, we have stagnant interest rates amid inflation concerns. The Federal Reserve stance. The Fed has maintained interest rates at 4.25% to 4.5% as of March 2025, showing reluctance to cut rates despite market pressures. That's not good. We definitely need the Fed to step in and save us. But they already said that they would not step in to save Donald Trump. Also, the inflation trends. The consumer price index CPI rose by 2.3% over the past 12 months, indicating persistent inflationary pressures. All right, but here's the fourth indicator. Wage growth versus cost of living. The real wage growth, inflation, adjusted wages and salaries increased by 1% for the 12 months ending March 2025. Purchasing power declined between December 20th and December 2024. Real wages declined by 3.2% as prices outpaced normal wage growth. Okay, so those are the four indicators, and they're all negative. Nothing about those indicators screams, this is a buy. We're ready for our next bullish market. No. And I also have some charts to go along with what I'm saying. So if we could look right here, this is our bond yields trend. We have a 10, 20, and 30 year, and then you can see the dates right here. So if we look at our 10-year, you can look as of 5/2025, this is slightly above 4.5%. You look at the 20-year, this is slightly above 4%. And of course, when you look at the 30-year, this is above 5%. Really bad. Wage growth. Look at this. Wage growth is yellow, inflation rate is orange. Okay, you can see here in 2020 when things were still really good, our wages were outpacing the inflation rate. Really, really good. 2021, we're entering the COVID territory. It's not so good anymore. And 2022 was horrible, as you can see right here. Very bad. Okay, let's go to 2025. Our wage growth is nearly half of what it was in 2020. but our inflation rate is double what it was in 2020. That is not good. I'm telling you right now. This should be screaming. We're not even halfway through the year in 2025. This has the potential to shoot all the way up just like 2022, which is where I think we're headed. Okay, let's look at the timeline of key tariff and trade policy events 2024 to 2025. Okay, so December 2024, tariff talks stall with China. Then we had in February 2025, Trump threatens 25% tariff on smartphones. Then in April 2nd, 2025, we all know this as the market crash of Liberation Day. That was a major event. It was crazy. Okay, May 2025. This is where we had the 50% tariff on EU imports announced. That's a big, big deal right there. And that's why we saw a market sell-off. Okay, let's look at this. This is the major US market indices 2024 to 2025. Right? We see some uptrend, some uptrend, some uptrend, and then some consolidation across the S&P 500, Dow Jones, and NASDAQ into a steep sell-off as we went from January through April. And now that's why we had those April lows. Now, yes, we have recovered a lot, but that doesn't mean we're completely out of the clear because the stock market is a leading market. It goes off hopium. And the second bad news comes out, you see its instant reaction. So yes, markets have recovered quite a bit, but the more negative news comes out, the more it's going to drop. Let's say this 90-day pause on tariffs just falls flat. Nothing happens. No deals are made. No deals are finalized. Where do you think these markets are going to go? They're going to go back to these all-time lows. What if everybody sells their bonds? What if China and Japan say, you know what? We're going to sell all our bonds. What's going to happen? The markets are going to crash. There's so many different things. What if we have another negative GDP report? Okay, we're technically in a recession. The markets are gonna crash. So, again, like I said, looking at these charts, obviously this is just technical analysis, but even the technical analysis is showing that we are having some resistance. We're starting to see some selling pressure, and we're also starting to see some people holding. A lot of people are just sitting on cash. Right now, honestly, if you want to sit cash, that's completely fine. We don't know where the markets are going to go. And honestly, I'm even thinking about sitting on some decent bit of cash because we do not know where the markets will go, whether they're going to go up, down, or freaking sideways. Or freaking in circles. Who knows? Nobody knows. This entire video has been negative, and I just want to let you guys know that I am bullish long term. I don't want to just talk about the negatives because there are a lot of positives. I don't want to talk about those in this video particularly, but what I'm saying here is just to keep you aware, keep you understanding of the risks, keep you understanding that if we do have a sell-off, it's potentially for one of the 4 indicators that we talked about in this video. Everything I talked about in this video isn't to say that this is 100% going to happen, that we're going to, go back to those lows of April, or that we're going to go and touch this support level right here at 475. Like, I'm not saying that's going to happen. I'm just saying that that's the potential, and it's important for you to pay attention, recognize it, so that you can plan and prepare. Because that's our job as traders and investors, is to understand everything that's going on in the market so that we can't be blindsided by something that happens. But I just want to say thank you guys for watching this video. Take care, and I'll see you guys in the next one.